Hello. Thank you for joining me today as I speak with Sadiq Adatia, Chief Investment Officer at Sun Life Global Investments, to discuss the Sun Life Granite Managed Solutions. Sadiq, how surprised were you by the sell-off last week, and how are the Granite portfolios positioned prior to the sell-off?
Last week was a back-to-reality moment for the markets. Markets have been on a tear over the past couple of months without any major setbacks. One of the risks that we have always talked about was a possibility of a second wave of the virus and how that might change people's outlook on the opening of the economy and the pace of recovery. Last week, we saw a spike in coronavirus cases, and as expected, investors started to worry again. I don't think this worry is going to go away for quite a bit of time, though it may get ignored every now and then on short-term positive news. There are still many risks out there, but this was definitely one of the bigger ones, and any further spikes could really cause markets to head sharply lower. Luckily, we have been underweight equities.
Thanks, Sadiq. Have there been any changes to the Granite portfolios?
We still expect a W-shaped recovery in the markets, so we continue to remain underweight equities. However, we do expect to see some rotation among sectors, given valuations, so we have been adding to our energy and financial exposures, but using the option markets to do so. This approach provides us the best risk-reward trade-off. Furthermore, we are slowly rotating to U.S. value as we feel there is more upside there given the recent pullback. Lastly, we're also looking for opportunities in international markets, but have not moved there in a meaningful way yet. We continue to balance the portfolio between short-term risk management and longer-term opportunities.
Sadiq, how are you using active versus passive styles in the Granite portfolios?
We continue to feel that you want to be active versus passive now, as it is a stock picker's market. There still remains risks that some companies will not make it through the next year, let alone the next few months. So being selective is that much more important. Also, what did not make sense a few months ago may now make sense given the enormous monetary and fiscal policy that you have seen across the world. That has put some support levels on some stocks and increased their upside. So inside Granite, we want to favor active management versus passive for any of our longer-term views. This is true in both equities and in bonds.
Thank you for your time, Sadiq. Appreciate your insights.